Alright everyone, so some breaking news. I've decided to become a Robinhood trader that now buys penny stocks of bankrupt companies. So obviously I didn't cash out all my stocks and go all in on this stock, but I actually did put some money into this company because there is the potential for huge returns. I'm talking about 100 times return on your investment if things play out right. So first, for a quick disclaimer, this is highly risky. This is a company that's going through bankruptcy. So there's a very high chance that the equity will be wiped out on this, and I'm not a financial advisor. This isn't financial advice. This is just something stupid that I decided to do with some money. And I first heard about this stock on valueinvestorsclub.com. They are a great resource for interesting stock picks, so I will leave a link to this down in the description if you want to take a read at the whole pitch that this person made of this stock. So this penny stock I just bought was of Akorn Inc. They are a pharmaceutical company and they are currently in bankruptcy court. So what that means is they defaulted on their debt and now they're in court to work that out with their lenders. Now this is a pretty insane situation that happened with Akorn because Akorn actually is a pretty stable company. I'll put up a list of some of the products they make now, and a lot of these products are widely used and sold in pharmacies. And even though they defaulted on some of their debt, they're still operating as a company, and their projections for the rest of this year and 2021. So basically, I don't even think this company would be in this position if it wasn't for the whole pandemic that shut down the entire economy. If that didn't happen, there's a very good chance that this company would be able to survive. So let's take a look at this stock. This company was once a high flyer. It was at over $50 a share back in 2015. In 2018, they had an agreement for a buyout from a company, Fresnius, and that was for around $33, $34. And they traded at this range for quite a while, probably almost 2 years. And while during some investigations, the FDA found that Akorn was not following some procedures correctly. And because of that, the merger was terminated. And ever since then, this stock has been in complete free fall, going from $32 per share, right now sitting at under 3 cents per share. So that leaves us to where we are right now. So right now the company's in bankruptcy court. They're working things out with their lenders, and there's really 3 ways that this could end up playing out. The first way is a classic liquidation where the company shuts down, sells off all their assets, pays down all their debt, and whatever's left over goes to the people that own the stock. Now the second thing that happens is the company could be sold to the lenders, and in that case there would be bids for the company's assets, and whatever the amount they got from the sale, they would use to retire the debt. And again, if anything was left over, it would go to the shareholders. And the third thing is very unique to this situation, where the court could potentially rule that because of the pandemic, even if there is a lack of bidders for the company's assets now, the company can continue operating until we come back to more normal business conditions. And then at that point, there would be an auction and a sale of the company. So we're going to go through each of these scenarios one by one and talk about what kind of result it would have on the stock price if each one happened. So the first thing that could happen is the company is just completely liquidated, everything sold off, and the company stops operating. So here's a court filing from the case of Akorn. I've spent a ton of time reading through these long drawn out court filings, but basically this is a liquidation analysis. So this, based on the court's estimate, if the company did liquidate, here's what would be left for the shareholders. None of this stuff really matters, and we get to here where we talk about assets available for distribution to creditors and recovery waterfall. And so these are basically all the liabilities that they would have to pay out. And when you come to the bottom, what you see for equity claims is 0%. So what this means is if the company was liquidated, there's not enough assets to pay off all of the debts and leave anything for shareholders left over. So if this was the case, if the company decides to liquidate, the stock will go to 0 and whoever owns the equity will be wiped out. However, there is very good news. This is literally today, September 2nd, 2020. Akorn receives court approval of sale to lenders. So the court basically just approved today that the company will be able to sell themselves to lenders. So as of right now, unless anything changes, this liquidation scenario is off the table. And that leaves us with the 2 different sale scenarios, each of which is a lot more interesting for the stock of this company. And here's a filing of some objections. So out of all the court files I've been reading about this case, there's been a ton of institutional funds filing objections to whatever plan the sale of the company is. And this is a good thing for me because it shows that a lot of these institutions and funds are still in the stock. And so because of that, they're going to do everything they can to make sure the equity doesn't actually end up worthless. The management team also still owns quite a large amount of shares. Even though there was some recent insider selling, they still have a significant holding in stock. So that's really the best you can hope for, where you have both the management and funds and institutions that hold the stock are fully committed to getting some value out of the equity. Now for the sale of this company, there's something in place called a stalking horse bid. And what this is essentially the starting bid for the assets of the company. And the bids can only go higher from this amount. It is sort of like a minimum bid or like an auction where they give you the starting price. That this is the default amount that will be accepted if there are no other higher bids for this company's asset. And when we take a look at what this stalking horse bid amount is, there's actually a decent chance that even in the worst case of the sale of the company, which would be this lowest bid offer, there still could be something left for the shareholders. So right now, the stalking horse bid is somewhere in the range from 900 million to around just over $1 billion. And so in the event that the company gets sold, which the court has declared is going to happen since the liquidation won't happen, this is pretty encouraging to the company. And so basically right now, on the company's balance sheet, they have 871 million of secured claims, and there's an estimated 100 million of unsecured claims that need to be worked through with the lenders. And so basically, if we get a sale of the company for over this amount, then we would start to see something stack up for the stock and for the equity holders. And so based on just the minimum bid, this could result in, I've seen estimates of around 50 cents to around 80 cents for the shareholders. And if you look at the stock right now, we're trading at 2.5 cents. So even if all we got was 50 cents, that's still a huge increase from where we are right now. It's like a 20 times return on this investment. Now, as of right now, this is the only bid that's been in place. There's been no other bids for this company's assets, which I do think there will be some more bids over the next few days because this company does have assets that are worth acquiring to other pharmaceutical companies that are looking to expand into this space. But basically this bidding process lasts a few days. So for the next few days, court will be open to bids. And if at that point there are no more bids, the stalking horse bid, the default stalking horse bid would be accepted. And at that point, we would see the official number of what it really is. And then we could determine if there would be anything left over for the shareholders. Which brings us to scenario number 3. If there are no other bids, the court can actually rule that there were no other bids just because of the pandemic that we're in. And so they could allow the company to operate for a while longer until business activities return to a more normal condition. And then there would be another auction for the sale of this company. And so if we do that and the company continues to operate and there is a buyout at a later date where a purchaser would have to pay a fair price for this company, this is where things start to get a lot more exciting for the equity. Where if you value this company on something conservative like 7 times EBITDA, it would bring you to around 1.3 billion, which is over $2 per share for the equities. Or if you do a 6 times multiple on what 2021, next year's EBITDA is projected to be, that could result in the stock going to over $3 per share. So it's still very unclear if this will actually play out, but if it did, we're talking about literally thousands of percent that the stock could go up. So guys, that's it. That's really my thought process for the stock. This company has just been in a ton of bad luck over the last few years. And right now things are as pessimistic as they could be. So like I said, there's 3 scenarios that could happen. Liquidation is very unlikely now that the court ruled against it. So right now for the next few days, we'll watch and see if there's any new bids for this company's assets, or in the case if there's not, we'll see if the court actually decides to rule that this is not a normal business environment and that the company can continue operating until a later date. So that's it. And over the past few days, the stock actually has kept sliding, where today we got as low as just around 1 cent. Right now we went back up to around 2.5 cents. My average cost for this is around 3.5 cents, I think. So this is actually lower to where I bought it in a few days ago. So ultimately, what do I think is going to happen? I honestly have absolutely no idea. This is one of the most complicated scenarios I've ever encountered in the stock market. And so right now there's just a ton of uncertainty. It really comes down to the courts and what the court ultimately rules for this company and what kind of bids we'll see from other companies for their assets of Akorn. Like I said in the beginning of this video, extremely high risk, no guarantee at all that this will work out. In fact, there's probably a very high chance that the equity will get wiped out. But if either of those other 2 scenarios played out, this could result in huge returns for the stock. So like they say, high risk, high reward. That's really what I'm going for this company. As obviously I didn't go all in. This is a tiny, tiny amount of my portfolio, and we're just gonna see how it plays out. So that's really it for this video. I guess I felt a little left out after not getting in on Hertz, which ran up hundreds of percent after declaring bankruptcies. So maybe I can make up for it with this one here. Be sure to give me a like on this video if you like this idea and the potential that it has. Really helps on my channel a lot. And if this is the first video you're watching of this channel, be sure to subscribe and hit the bell icon so you get notified whenever I upload a new video. And I'll come out with any updates if anything exciting happens with this story. But until then, I hope to see you on the next video.